Which is the best time frame to analyze a stock? Well, it really depends on your trading strategy. For instance, if you are swing trading, then you need to focus on the bigger time frames such as the weekly, daily, and 4-hour time frames. If you are day trading, then you need to focus on the smaller time frames such as the 15 minutes, 5-minute, and even the 1-minute time frames. As a day trader, I like to analyze bigger time frames like the daily and the 4-hour to get a better idea of where the stock price is heading. In this video, I will show you how the stock pattern looks like when analyzing the 4-hour time frame versus the patterns developed on the 5-minute time frame. On the 4-hour time frame, you can see a bigger picture. Notice how the stock formed an ascending channel pattern. Looking at this pattern helped me identify the overall move of the stock for the day. At the end of the day, you can see that the price started to reverse a little. You can even see the post-market price dropping. This is because the stock touched the resistance trend line that I had identified a few days back on the 4-hour time frame. This is an example of how I would not be able to identify these critical patterns by just looking at the smaller time frames like the 5-minute or the 1-minute time frames. Now I zoomed into the 5-minute time frame to find a good trading opportunity. What you see on the screen now is the very last candle we saw a minute ago on the 4-hour time frame. Here I was able to identify a different pattern that helped me identify a good play. During the last few hours, SPY formed a rising wedge. This pattern is normally bearish. My plan was to wait until the candles broke outside the wedge. I was very patient waiting for this to play out. At 1:35 p.m. the price broke out of the wedge and I took a quick short position. This short position was left open until 2:05 p.m. I closed my position with a small 16% profit. So this is how I use multiple time frames to increase my chances of winning my trades.